Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Wright Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, everybody. My camera not on. Can you believe I've been here for my camera not on, and I'm sharing my screen. Let me get myself together. I was looking down at my phone, and I ain't realized that the promo had stopped. I was looking at my phone. Yeah. Start AI campaign to assist you with your meeting. Start meeting question summary. Get out of here, AI campaign. Good evening, everyone. If this is your first time tuning into Tim's Tidbits, please allow me to say welcome. But if it's not your first time tuning into Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rodriguez, a.k.a. Aranya Grande. Now, that just means big spider if you don't hablo español. And you're in tune to another episode of the Intraday Price Action Recap. Yeah, that's about all I want to say. Who in here tonight? We got light-skinned Deborah in here tonight. We got Lump up in here. I see Hit Learner Share up in here. I see Kim up in here. I see Rhonda. Oh, excuse me. That yawn snuck up on me just now. I see Rhonda Green up in here. We're going to go on and get into it, man, because I'm kind of hungry. And I got me a Jersey Mike sub sitting on the table waiting on me to go devour it. All I had to eat all day long was a salad. I like to call it a chicken nugget salad because I go get a bag of salad that I bought from Sam's Club, pour it in the bag, pop me a few chicken nuggets, either in the air fryer or the microwave, cut them up. What's up, Tasha?
cut them up, fold them chicken nuggets in there, sprinkle a little cheese off in there, put my dressing of choice on there and eat it. But that's all I had all day long. So I'm hungry as a hostage. Yeah. Now, I'm going to go ahead and share my screen and we're going to go ahead and get into it. If Price did something that caught you off guard today, hey, let me know. We'll talk about it, man. We'll talk about it. If Price caught you off guard today, we will talk about it. Oh, looking here, I see that I got it on a daily chart. Let's come down off that daily chart. Let's drop on. Let's look at a 60-minute chart first. So looking at this 60-minute chart here, this is our 20-day look back that we got highlighted there, right? We're inside of this bullish dealing range right here. It's also the same same quadrants, right? So like we spoke about before, when you're doing the IP to look back, you don't want to confuse the IP to look back with the dealing range. Okay. At some point in time, they will be the same range, but they're not the same thing. Okay. So right now, as you see, we have our IP to 20-day look back graded, and it also happens to be this latest bullish dealing range that we're in is graded also. During the IP to look back, right, you're looking for liquidity and different PD arrays 20 days back. That those are your high probability PD arrays, right? Like if you're looking at a daily time frame, right? Looking back over that 20 days, right? The PD arrays that rest inside of these 20 days, right? Those are the PD arrays that you want to focus in on. So if you're bullish and you see a PD array that rests in the discount, you're watching to see, hey, how does price trade? Will we get there? Am I seeing that discount sensitivity? Am I seeing that premium sensitivity that this order flow requires? Okay. Are we retracing to certain things, right? Looking at our 20-day here, we have a bullish order block here. We have a really small bullish fair value gap there. We got a volume imbalance there, aka new week opening gap, right? Because that's a Monday and that's Friday. So we have all of these discount PD arrays, that wick right there. Got all this stuff over here, right? Right now, the order block is still holding strong, I'd say.
Hey, Tim.
Hey, Deborah.
You already switched your contract?
Yes, I did. I
Oh,
switched.
okay.
I switched yesterday.
Yesterday, okay.
Yes. And for those who don't know, when it comes to this week is contract rollover week, right? This week is contract rollover week. So you have a contract rollover like monthly, and you have contract rollover quarterly. You have contract rollover, you have daily and weekly contract rollovers, but the quarterly contract rollovers are the most significant. Those are the most positions that have to be closed and open. It's that old quad witch time when we went through it before, talk about the futures options on futures. We looked at the four different things, that contracts that have to be closed during quad witch. So it's the time where it's typically pretty volatile, right? And the monthly and quarterly contract rollovers, they happen on the third Friday of the month. It's either monthly or every 3 months, is like, so it's really a monthly thing. But like on that third month, what is it, fourth month? Yeah, on that fourth month, it's like um you got the quad witch. So December 19th is, and that's the date when you can no longer, after that date ends, right, you can no longer use that contract, right? Whatever contract you're on, if it's a monthly, quarterly, you can no longer use that contract. Okay. So what Michael teaches and what most platforms do for you automatically is new when the next contract gets more volume on it, then most platforms automatically switches it for you. They do an automatic contract rollover. But if your platform doesn't do it, like TradingView, it doesn't do it. What you want to do is either go to barchart.com or the CME website, cmegroup.com, and you want to go to your asset that you're trading, right? NQ. Where is it? Why didn't it come up? NQ was right there, NASDAQ E-mini futures, right? Come to the NQ right here in the middle, right there. It says volume and open interest, right? And you click on it, and then you want to come to, right? You see here we got December 2025, right? And we got March. So right now, December is ending. December 9th at COB December 19th, you're not going to be able to use this December contract anymore. You're not going to be able to trade it. So the next contract is March, right? And you want to look at total volume, right? When the volume on the next contract is higher than the volume on the one that you're currently using, that's when you want to roll over, right? And like I say, most platforms automatically roll it for you. It's something that's done. Some of them might pop up and say, hey, do you want to roll over? And some of them don't. It's like an automatic thing on most platforms. But in the case it doesn't, switch it over for you. Now you know how to go get it. And this is on CME group, right? I look at the CME group because that's what the futures run through. It's like Chicago Mercantile Exchange. Chicago, is it Mercantile or Mercantile? What is it? Chicago Mercantile. It's either Mercantile or Mercantile. Chicago Mercantile Exchange. Let's see here. CME group. Why they don't have the name just right there? About us. They should just have the name right there. CME group. World's largest CME group. Oh my God. How can you not just have the name right there? Y'all know I ain't gonna be able to stop until I see the correct. Chicago Mercantile Exchange. Right. I was saying mercantile, Chicago Mercantile Exchange. All right. That's what CME stands for. And that's what the futures go through. That's why whenever you go to CME, it's always on Central Time because it's based out of Chicago. Right. When I went to uh, New York recently, we was down there on Wall Street, and I was, taking pictures in front of Wall Street and stuff like that. I said, I want to take a trip and go by the CME. I want to go by the Chicago Mercantile Exchange. I want to take some pictures at because I trade futures. So I want to take pictures at the CME. All right. Oh, and then bar chart. If you do it on barchart.com, right? Just go to bar chart and then you just go to the what's the name that you trading? Go there and you scroll down here and go to all future prices, right? And it's the same thing, right? You have the December contract there, and the next one here is March, right? And then you look over here at volume, right? Here you look there at volume. Right now this is because it started up now. Like if you look at it, if you looked at it at the end of the day, the volume will be much higher. But we done started a new session, so it's just showing like really low volume right now. But the March is still higher, right? So with this one here, it show it for like the whatever session you in, and right now you're in this new session, and so it's got low volume, but as you can see, it's more volume on the new contract. So, and for those who don't know, the expirations for futures are the same 4 months every year. March, right? June, September, and December. Same expiration months year after year after year, right? You got H, M, U, and Z, right? The same 4 months, the same 4 letters. H is always March. You just change the year. NQH. Trading View has 2025. Bar chart got 26. Trading View got the whole 4-digit year. Bar chart got a 2-digit year. Right? Some things like Ninja Trader, they have the month. It'll be like NQ03. I think 2025, 26. I think it is. I think it's like NQ03, 2026, NQ06, 2026, 09, 2026, and 12, 20. You know what I'm saying? Some of them go by the month, some of them go by the letter, right? Instead of H, it's NQ03 with the year, NQ06 with the year, NQ09 with the year, NQ12 with the year. That's how Ninja Trader do it, right? With the month, because it's the expiration month. Same expiration month year after year after year after year. You just change the year. So, quick lesson on contract rollover, when to roll it over if the platform don't do it for you automatically, and how to identify, right? What month your expiration is based off the letter or the month. And then just either 2-digit year or 4-digit year. All right. Some of them have like a 1-digit year. Right. Some of them have a 1-digit year. Now, right now on the daily, okay, we're closing, still respecting the bullish order block here. This is our bullish order block on the daily. We've closed, still respecting that. I had my eye on this daily low right here. I was kind of hoping we got down there to it, but we did not. Down there, 848. It's 24,848. We didn't get down to that low. Also, there's a bullish fair value gap down there, and it's a volume balance here. The reason why I was eyeballing that low, hoping we would hit it, was because we do have that bullish fair value gap down there, and repricing down to that would have just been, offering sell side delivery to this very small little space right there. All right. All right. Now, let's go in and look at today's price action. Looking at how we're dropping here, we had an opportunity to create a SIBI back here on the 12th, but we traded back up into it. And as we see, we got an immediate rebalance there, right? That pushed us further down, but then we had a strong reaction, right? Initially here when we came into this order block, then we traded back up, right, into this wick here, then on today, and then we dropped like it was hot, because when we started out today, we was in a buy program, and then we quickly broke down and repriced all the way down. So we came in, took out the high, came back down, took out the low. All right. Nice, strong, bearish day. All right. Left that low right there intact, then trade to that. And then we got a new week opening gap that's down here resting at the lower quadrant of the 20-day look back. All right. Since we're below the equilibrium, right? It's a probability of us coming to the lower quadrant because we're below equilibrium. We don't have to, but there is a probability because we got an expansion. Now we've got a deep retracement. We're inside the order block there, right? Inside the order block. So there's a probability of coming here. Why do I say that? Because when we're looking at this based off of everything to this side of that line right there, looking at those quadrant levels. All right. So we've made a beeline down and we've come below equilibrium. All right. So just like here, we came below, came back up to the upper quadrant, came down to the equilibrium, right? Responded back up. Now we came back up, traded back down below here again. This time we just explored below. This time, right, we closed below. Right, now that we closed below, right, coming down to that next quadrant is a high probability, right? Because you know how price likes to stair step, right, down these quadrant levels, right? And also, what are we looking for? Our highest probability trading opportunities rest inside here, right? So,
Hey Tim,
yes,
that high probability trading area, that's just the name for it. You don't have another name that y'all call it. What's that? It'll be 25 and
75.
75. Yeah, between
Yeah,
25 and 7. You just call it the high probability area.
yeah, it's pretty much
Okay.
because this is the area where you're looking for key PD arrays and trade setups, right?
Right.
Your key PD arrays are going to be inside here. This is like the meat and potatoes, right? Unless like when the way Michael teach it, right? Let's just say right now we're, what I'm saying, we're like prices bullish here. All right. Let's just say price is bullish right here. Okay. So with price being bullish, unless you're anticipating price that we're bearish based off this right here, right? You're saying, okay, we just expanded, took liquidity, retraced back up to a premium, manipulate these highs to keep going down, right? The only time you're looking for stuff down here is if you're bearish And now this is our dealing range we're in. You're looking for price to get down here and then create something down here to sell off of. Because as we know, the best shorting opportunities are in the discount of this previous range right here. Right.
Okay.
Like,
But
so if
you
we
say
come
this our
down
new dealing range right here, but we didn't take the high over there to the left. I thought that'd be our dealing range.
right here,
I'm talking about the where your orange line at over there. Yeah, with the
up
red
here.
one up. Yeah.
Yeah, it don't matter if you don't take that high. It's just a dealing range inside of this.
Okay, okay.
You
All
see what I'm
right.
saying? You got this bearish dealing range right there where we got our dealing range here, right? And then we trade back up. So we've taken liquidity there and we've taken liquidity here. So we got a bullish dealing range right there, right? It doesn't negate what's going on over here,
All
right?
right.
So if you, and right, and the only reason why we're looking at it on the bullish bullish side is because the higher time frame is bullish, right? And this move right here brought us back down to a discount, and we're getting this reaction off of our higher time frame discount PD arrays. So now we're looking at that as the retracement, right? And now we're looking for it to deliver back up here. Okay. Now, and then also going in line with seasonality, which really ain't been seasoning this year. Like ever since like August, seasonality just been going opposite of what it normally do. Just been going opposite of what it normally do. So do we get the Santa Claus rally for the last? I think the Santa Claus rally be like the last week of December into like the first portion of January. When we just get the Santa Claus rally, I don't know. Will we get it this year? I don't know. But um
And I told you off.
yeah, all the way
But
off.
you were saying we only reason we're gonna look for entries down at the 25%
Oh
at the
yeah.
bottom. If
Oh
we
yeah. Yeah. So when you if you're bullish, right, you're looking for, this is where you're looking for your trading opportunities, right? This is where you're looking for your trading opportunities for your meat and potatoes of the dealing range, right? If you're inside this dealing range and you're bearish, then you're looking for something to transpire down here to trade off of, right? So if you're like, for example, right, if we're looking at this entire range right here, okay, let's look at the entire range, right? Looking at the entire range, okay, and so this is our 40-day and 60-day look back, right? We're looking for our trading opportunities in here, right? So when you're right in a premium, right, you're looking for reasons to sell off of PD arrays up here, right? When you're in a discount, you're looking for reasons to buy off of PD arrays in here. Now, this is a bearish dealing range. If you expect price to continue down, right, then you can focus on this area here and say, okay, what PD arrays are formed down here now that price has dropped and gave me structure I can trust? What PD arrays that I can sell off of down here to continue down? That's when you start looking here. And the same thing for like on the bullish side, right? What PD arrays can I trust up here now that price has given me structure that I can trust as support, that I can continue to buy off of, because we're hot, we're way up here in the premium, right? So these areas here, you're looking at them for full out reversals or continuations. All right. But other than that, for regular trading, right, this is the area where you're looking for the meat and potatoes, right? The meat and potatoes of the move. Because if you get in here and price run off, right, you ain't worrying about trying to participate here. Or if you get in here and price run off, you ain't worried about trying to participate here, because you done got in at the best place, right? Got in at the best place for bearish or the best place for bullish, right?
So as far as we at right now, what's your crystal ball saying? We gonna continue down, or we gonna reverse and go and deliver up?
Right now, we still, all right, we still waiting on price to, right now, we're still respecting the order block, right? So right now, it's still respecting the order block. We ain't disrespected the order block yet, right? We still got an imbalance we can reprice to right there. Okay. And we still got a small imbalance down here. I mean, right here, we can reprice to plus a volume imbalance down here, right? That we can reprice to. So you still got plenty of PD arrays down here that you can reprice to. So right now, we haven't invalidated this buy program or this sell program. Neither one of these have been invalidated yet, right? Because this right here is the middle of the road for the bearish dealing range, right? So all we've done is retrace back up to a premium, manipulate buy side, and start trading back down, right? And then for the bullish dealing range right here that we created within our 20-day look back, you know, right there, we're still right there close to, we're in a slight discount right now, right? When a slight discount, and the only thing we've done is expand and come back to a discount, right? So what do I always say? Whenever you can frame it both ways, nothing is high probability, all right? If you can frame it both ways, nothing is high probability. And looking at what we're doing coming down, right? We're not forming any fair value gaps coming down, right? Right now, we got an opportunity to maybe form a fair value gap right there. But where are we about to form that fair value gap at, right? In the discount of this range right here, right? You formed it in a discount of the range, right? You would want to see, for like bearishness, you would want to see the fair value gap forming in the premium of the range, so that when price came here and retraced back up to the premium, it's a reason to sell, right? When price start come down and you start forming bearish fair value gaps deep into the range, right? Now you're at a point where you're anticipating that to become an inversion, because we come here, right? Let's just say we come here and kiss that 25%. Like I say, it's a high probability of going to that 25% because how we're trading through the 50%. We explored below it, wick back up, right? Traded up, and then came below it again with a commanding drop. So, right, looking at, hey, it's a high probability we come there. Let's say we do come there. Boom. Right? We do come there, trade down into the volume imbalance, right? And then start to go back up, right? What do we just create over here, right? We just created an intermediate
Important,
term low,
man.
right? So, and we don't invalidate this buy program here until we trade below there, right? We don't invalidate this sell program until we trade above there. We don't extend this sell program until we trade below there, right? We don't extend this buy program until we trade above here. Okay, so right now we're just right here in the middle of the road, right? We kind of right in between things, and then it doesn't surprise us, because why? We was consolidating here, we was consolidating there, right? This area right here is an area of some type of fair value, right? This is an area where a decision had to be made here, a decision had to be made here, a decision had to be made here, and now we're right back in the same area. All right. So ain't nothing wrong with sitting back saying, hey, I need some more information, right? And that's what we want to, we want to learn how to do when we're watching the charts, right? Until price gives you something, be like, hey, I know what that is. I know what that signature is. Don't do nothing on this daily time frame. Is not giving us any of that. We're just coming down, right? Prices just dropping down. We're not creating fair value gaps, right? We got overlapping candles, right? And now we've come to our first discount PD array inside this bullish dinner range. Boom, we're here now, right? We're here now. The order block, right? Then we have a small BISI right there. Yeah, true. We got this wick right here, but you know what I'm saying? That order block there. I'm putting more precedence on this order block right here, right? First PD array that we're coming into, right? We're down in the discount. We here now. We in a discount now. Are you gonna give me some signatures? Because this right here gave me nothing yet. And gave me nothing. We just got to the place where we're looking for something. You know, just got to the place where we're looking for something. All right. Looking at a 60-minute time frame. I think that's the low that I was talking about here. Yep, that's the low there. It's like a prior day's low.
Well, look, when you was talking about that little,
That's what I was eyeballing for.
when you was looking at your trades.
Yeah.
Oh,
I was eyeballing that, wanting price to come down into that, right? Because this is the liquidity that we can sweep prior to hitting that lower quadrant, right? So pushing down past this quadrant here, right? We got liquidity right there. And then we got that quadrant there. Yeah, true. We still got some liquidity under that can be taken. But since I'm anticipating price to come here, I'm not trying to force it past it. So that's why I was looking at that liquidity right there. I'm not looking at the liquidity past it. Yeah, we dropped down there to it and sweep that. Hey, whoop-de-doo. Right. But I was just watching that and we didn't quite get there today. All right. We have traded 3 days this week, Monday, Tuesday, and then Wednesday. Right. Monday was a strong down day. Tuesday was an indecision day with more buy side delivery, right? Because we closed in the upper part of the daily candle. And then today was a strong down day, right? Strong down day. Today price was it was move pause. That's all it was on the on the hourly time frame, 15-minute time frame, right? If we look at the hourly time frame, right, it was move pause, right? Huge drop, right? Really no way of participating. Get down here and then choppity chop chop slop. That's just moving down, tearing people head off. 15-minute time frame, right? Same thing at 9:30 right here, right? So at 9:30, drop, pause, drop, pause, right? Moving to that choppity chop chop slop for the rest of the day. Slowly melting down, but it's just back and forth, drop down, back and forth, drop down, back up. You know what I'm saying? Choppy, chop, chop, slop. All right. Then after 4 o'clock, look how we rallied back up. So we closed here at the end of the regular trading session. And then between 4 and 4:15, rallied all the way back up there. And eventually we closed here off the low. All right. But again, huge drop, hang out there. Huge drop, hang out there. So on the hourly, just dropping, really no opportunity to participate. 15-minute, just dropping, really no opportunity to participate. Right. 5-minute
Question
time.
for you on that
Yes.
15.
Mhm.
You don't, you in particular, do you not trust that entry after we close below that camera inversion? It was at first, right there at let's see what candle was at, the midnight 30 candle. Yeah, do you not trust that? Because that's the first one, the first candle after midnight, and it's also, I mean, the first fair value gap after midnight, and it's also the first one leading to our run up to take liquidity.
No, it's not. It's not that I don't trust it. It's just that, right? Look at what I got to risk. Look at my measurable risk. Right. My measurable risk on this trade, right? Come here. Right. That's the inversion right there, right? That's the inversion fair value gap. So when we come down here and close here, right? We come down there, close here. Mind you now, we still have not taken out that low, right? All thing we did was come down to the order block. So right here, right? It's not showing me that it wants to go lower yet, right? All thing we've done is trade back down into the order block, right? Back into the rejection block. We come to the rejection block and then we're closing, respecting the order block. So right here on this candle, it ain't gave me nothing yet, right? Now here, right? I don't know if we go up or down first, but let's just say we go down first, right? I'm gonna say we go down first. Let me take some of this off so I can actually verify that. All right, so we actually do both, right? We go up first, go up, drop down, right? Come down to the order block, then go up and trade above there, right? So now on the 1 minute time frame, right? I've swept liquidity, right? And I've come back up and got a breaking structure because this high took out the liquidity and got a breaking structure. All right. So on a 1 minute time frame, I've swept liquidity and got a breaking structure when I traded back up into the inversion fair value gap. Right. So at this point here, if I'm shorting, right, based off my 15-minute time frame, right, I'm going in, right, when I trade back up into my inversion fair value gap, right? Now, right, this is my inversion fair value gap, right? But right here, I don't even have a SIBI yet. You see what I'm saying? I don't even have a SIBI yet. So I don't even have measurable risk to take this trade right now based off the 15-minute time frame, right? Just on the fifth, because we was talking about the 15-minute, right? I don't have measurable risk because I don't have a SIBI yet, right? So there's no rule for me to place my stop entering here, right? Because I don't have anything over here to measure, right? The only thing I can do is just go back to the swing high based off of, you know what I'm saying, basic rules, right? That's the swing high from where I'm entering. All right. And then we come over there now, right? Now I got a SIBI here. Once this candle closes here, right? Once that candle closes, now I got a SIBI in place. Okay. So now based off of this here, if I'm still trading based off of here, now that this candle has closed, I have a SIBI. Now, if I want to trade off this, now I can take a trade, right? Next go round if it you know what I'm saying, if it gives it to me off of that. So now come back, boom, it picks me up, right? So now I'm picked up. So now still my wrist, I got a sibby, right? So now I got to come here, right? Because the sibby is there. I'm trading off of this, but I have to allow for, I got to trade it based off of the PD arrays. So now that's where my mandatory stop will be, way up there. My safe stop is the swing high, right? So now that's way too much risk based off the 15-minute time frame for me to take that trade, right? So that's why I say it's not that I'm not trusting that, it's just too much risk, right? So it's not given an opportunity. I've come down, right? But it's not coming back to let me sell in the premium. Only thing it did was drop down and then start forming structure, right? It's starting to form structure. Okay, once you form structure, okay, I got some structure I can trust, and you leave it. Now I need you to come back and give me something I can trade off of in the premium of from here down, right? Because right now, this is the price leg. So if I'm not coming back to a premium here, okay, I need you to form some structure for me to come back to a premium of. All right. And then we put the meat back on the bone, like I was saying before, right? We come here. All thing we do is form the structure and then leave it. Right now that we form the structure, okay, I can trust that structure. We don't come back to a premium again. We just go down straight into the low, right? Then once we get to the low, right, we just start consolidating again, right? Just start consolidating again. So now here we are just consolidating again, and then we leave the area, right? And then we come back right there. But now, see, this is our area there. We come down, set a low, set a lower low. Then we move back up to a premium into the fair value gap and eventually drop down. Then once we drop down, right, we still don't reach that low right there, right? We turn right back around and rally back up and get a break in structure. Right. But we did get a chance to form structure. We did get a chance to come back to a premium and eventually have a nice little sell off. But we didn't get that here or here. Okay. And yes, that is there. But where's your risk? You know what I'm saying? Where's your risk? Yes, that would have been successful if you took something inside there, but where's your risk? Okay. And then what we also want to understand is, right, let's check this out here. Even if, right, we just went above there, do like the hindsight gurus do, right, you still looking at like almost a 30-point stop. You know what I'm saying? That's still a big stop. All right. That's still a big stop right there. Even if you want to sell it like the hindsight gurus and be like, oh, see, this was the perfect entry right here. Right. Y'all know I ain't finna do that. I'm gonna give it to you raw. All right. 5-minute time frame here. Right. 5-minute looking just like the 15-minute. Right. 9:30. Where we at 9:30? We drop down. Right. Start consolidating. Right. Once we form this structure there, drop down. Right. Come down to equilibrium of the range. Right. Now the 5-minute time frame, on the 5-minute time frame, we do like get an opportunity at this suspension block right here. But I'm gonna be perfectly honest with you, right? I'm not selling that. I'm not selling that suspension block right there. I ain't gonna hold you. I am not selling this suspension block on the 5-minute. All right. Because we start here at 9:30, drop, form structure. Don't give an opportunity to retrace back up. Drop, right? We pause here, create a suspension block, take out the low, right, and start to trade back up into the suspension block. Nothing right here is telling little Timmy Rogers to sell. Why? We are so far down into a discount, right, from the 9:30 open to the low of that suspension block, 336 points to the downside. I am not selling that. No, sir. I'm not selling that, not based off this 5-minute time frame. Right? 1 minute. Okay. Looking at our 1 minute time frame here. Excuse me. $9.30 from $9.30 here. Right. We go up into the imbalance. Unless you was already watching this at 9:30, waiting to get short there. Right. Unless you was watching that, waiting to get short. Right. That was about your only opportunity right after 9:30 there. Unless you was already watching that saying, okay, if we trade back up and then I'm gonna get short. Right. 9:30 open up, we displace away. Right. Come here. Start to consolidate there. Right. Drop down. No type of displacement there. Okay. Trade back up into the order block. Drop down. Then we immediately, right, create an inversion fair value gap. Right. So we trade down into the order block, trade back up above the buy side there. Right. But as we're displacing away and take out the buy side, we immediately come back down, creating inversion fair value gaps. Right. So not showing the willingness to go up, not showing the willingness to want to go down. Right. Hanging out. And then once we get here, start to displace away, right? No opportunity to participate, right? Right here, we get our fair value gap. We talked about this earlier on the stream. As we move down, we was watching this order block, saying if we lose this order block, right, that was bearish. This order block is where you want to see price be supported for the bullish narrative, right? We lose the order block. So since we lose the order block there, right, we're not looking for price to trade back up in here, right? So this fair value gap here, as we're coming out of this area there, and then we immediately create another fair value gap right there, right? We want to see that act as a breakaway gap. So this would be the fair value gap you're looking to short off of. While we was watching price, we was talking about like a bunch of other different things. And I just looked at price when I was running and I was like, okay, now that we've come here, we want to see price come back and give you an opportunity to short. And I was looking here because it was based off of some quadrants that was there. Totally forgot that we just talked about these order blocks acting as support. And if they fail, now they're acting as resistance. So we should only be looking for price to come back up into that fair value gap right there. All right. So if you was in tune with it, that was your shorting opportunity on the 1 minute time frame to go down into the sell side liquidity. Again, here, me, myself, I'm not selling this, right? Because we're way down in the discount of this move. We formed structure we can trust, but we're all the way in the discount of that area, right? So me, myself, I'm not selling that, all right? So 1 minute time frame did have an opportunity there, right? I miscalled it today not that it's a call out service, but I was focusing here, forgot about that there. And then once I zoomed back out, I was like, oh, I forgot all about that right there. So this is where you should have been looking anyway. Right. Not too proud to tell people I messed up. Players mess up too. Yeah. So yeah, that was it, man. Today was like, it was one of them days where price was moving, but it wasn't really offering the type of opportunities that I take. Now, if you trade different strategies where you trade upon like candle closures based off of order blocks, you might have seen plenty of trading opportunities. Right. If you trade based off of structure breaks, right? Get a candle closure, right? If you get a candle closure below a structure break and you just go short here, right? That's opportunity there. If you trade off of order blocks, right? Get an order block here, right? Trade back into the order block. That's an opportunity there. Okay. Up here, if you trade I'm gonna say if you trade breakers, but we never traded back once we came down and offered that price there. We never traded back up into it. So can't point that out. But y'all get it. If you trade different ways, you know, you may have seen many opportunities, but based off of my trading style and the way I do it, right? 15-minute ain't offer nothing, 5-minute ain't offer nothing, 1 minute offered one clean short setup, and it also offered another setup up here if you was just waiting on it based off of here, right? You're just waiting on it based off of there. Okay, like if you comfortable with shorting going right into 930, right? When we come here, right, we're trading up there, trade up there, above here, then we break down, right? Come back up, right? Trading up, you're shorting here, ICT 2022 model, right there. All right. Also here on a 22 model, like if it didn't catch inside there, right? I don't know if it caught it inside there or not. Let's see. And it did, right? Right there, it did. ICT 2022 model there, right? If you're comfortable with shorting inside there, you got an ICT 2022 model there because we come down, right? Trade up above that buy side, drop down, breaking structure, right? This really not a breaking structure here because we got that inside of that gap. Because Micah teaches that that's not a breaking structure there, right? You get your breaking structure here, right? And then we trade back up into that SIBI right there, right? So based off of hard and fast, the way Michael teach it rules, right? Okay, so that's the liquidity sweep on a breaking structure. This right here is just a liquidity sweep there, right? So we go up, take out buy side, manipulate the buy side, right? Drop back down, take out the sell side, trade back up into the imbalance and drop, right? Come over here, take out the buy side, drop back down here, take out the sell side along with the breaking market structure. We take out two levels actually here, right? So taking out sell side along with the breaking market structure, then we trade back up into the bearish fair value gap right there, right? Overshoot it because we go all the way back to the rejection block. Overshoot it a little bit, but with your safe stop, you're still safe, and then price drops, right? So if you like I said, unless you was waiting for this at the open, right? Because that's the short we was talking about. I was talking about in the beginning when I said unless you was waiting for this, and that's based off of the 2022 model, right? That's all I got, man. Anybody got anything for me? Oh, another thing that you could have been watching, right? Like we talked about before, with the inversion fair value gap, right? Let's go to a 15-minute time frame. Okay. All right. And we talk about like stuff just getting like confluence of things right here. So everything to the right of this line is after this inversion fair value gap exists. All right. So we go down to a 1-minute time frame here. All right. Go to the 1-minute time frame here. Now you see here, price trades back up into, right, the inverse fair value gap on the 1 minute, right? And we set a high right there. And then we come down, right? Failure to take out that high, right? And then we're looking there. We say we are defending the upper half of that inversion fair value gap, right? So we come down there, manipulate the low, right? Trade up, right? We trade above that high, but we don't take out that highest high right there. So now if you're in the mindset of, okay, I see how we're defending the upper half, right? Then you could choose to sell this at some point in time. And you know what I'm saying? Now you got a defined risk there because that's the high. We're refusing to go above, right? Refusing to go above there. So when you come down here, you trade back into it here, you might be able to short there. And you're saying, okay, we're not taking out that high. So if we take out that high, I'm wrong, right? So now it's giving you better risk to reward getting picked up here. Wrong one, right? Getting picked up as we trade back into it there. And my measured risk is there, right? Still a big stop, right? But my measured risk is there. Okay. And if it trades above that high, I'm wrong. Okay. Yeah, it do come back and get your duty hold a little tight because we trade above that right there. Right. And then once we get over here, price drops. Okay, price drops. And a lot of times when you're trading, right, based off of macros, right, a lot of times you don't get the most beautiful opportunity going into the macro times, right? You don't always get the most beautiful opportunities going into the macro time. Right? Because right, these are the macro windows during that time. Right? These are the macro windows during that time. And you're not getting the most beautiful price action because during this macro window, right, we're in the midst of a area of distribution. Right, we just accumulate and buy stops and sell stops because we're coming down. You're just in this area of distribution over here, right? You can anticipate it going down all day long, just like, once we show signs that we're bearish, right? It's okay. We're on the right side of a market maker sell model, looking for reasons to sell, right? But all it's doing is dropping, pause, drop, pause. It's like really not give you nothing to look at, but there are ways you can go in and say like, okay, I'm at a 15-minute inversion fair value gap. We're defending the top of it, right? All these bodies here are respecting consequent encroachment of it, right? We're not trying to take out that high, right? That high is a swing high created during a macro time, right? We're not trying to take it out, right? So, or you could be, like I said, if you're the type of person that trade based off of closures, right? Once we come here and drop below all of this right here, like all of this sell side there with that low there, we drop down, get that strong closure down below all of that right there. We had an indecision, then a strong close, right? A lot of people trade like that. Just go short here. As soon as this candle close, right? I'm leaving this balanced price range, right? I don't need it to come back up there. Or some people trade as soon as we create fair value gaps, right? We got that count as soon as this candle right here close, that fair value gap is created, right? People are short because it's got a fair value gap. They're not anticipating price to come back above that fair value gap, right? I know plenty of people that trade fair value gaps like that. As soon as it formed the fair value gap, they don't wait for the retracement to it. Like you got 1, 2, then when a third candle close, fair value gap, boop, short right there. I've seen plenty of people on YouTube that trade like that. I don't trade like that because I wait for the retracement back into the fair value gap. But some people just be like, hey, you know what I'm saying? Get me into the trade as soon as possible, right? So as soon as this candle closes, right, they're getting in pretty much on the open of that candle, right? And then they're putting their stop back above the fair value gap. So they'll go here, right? That's fair value gap. They put their stop back up there, and then they're targeting something down here, right? But, right, just a few different ways of looking at how to trade the price action, outside of just looking at, this is what price did. That's about all I got, man. Anybody got anything for me before I get out of here? All right, then.
I ain't got that. I've been missing class a couple of days. Told everybody about my nephew and band. I don't know if you told them.
Oh yeah, yeah,
Oh,
yeah.
okay.
Yeah, I already talked about that. That's old news.
Yeah, hey man, I was out of class a couple of days,
Hey,
man.
you should have been here, man. Should have been here. You know what I'm saying? You and your nephew calling me at 12:30 in the morning, 12:45 in the morning.
Oh, you still ain't talked to him?
No, I ain't talked to her. I ain't called him back. Yeah, I ain't
He
called him
had
back.
something with his kids right now. They had to play right now.
Yeah, I ain't even talked to her. All right, man. I'm about to go get into this Jersey Mike stuff, man. I appreciate y'all for hanging out with me. Hopefully, y'all found value in this. I'm a little bit tired and I'm a little bit hungry, but I'm still tempted to leave Roger Sr., aka Aranya Grande. Until the next time I decide to get on my algos in there and share my thoughts on this thing that we call price action. Y'all be safe out here in these trading streets, man. Gone.